Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table. Welcome back. You are listening to Money on Tap. My name's Seth Krussman, and joined here once again by the one and only Mr. Benjamin Brayshaw. How are you, buddy?
Good morning, Seth. How are you doing?
Doing well. You can reach us at Money on Tap at yourmoneyontap.com or info at yourmoneyontap. And of course, give us a call at 855-226-8551. We'd love to talk to you. We always enjoy the call-ins and appreciate you bringing your concerns to us, people that have personal finance going on in their lives and their businesses, and we're here to help. And today's show is built around
personal pensions, those personal pensions. You know, Seth, this show is one of those things where we've done a number of ones kind of around it. A little bit of a replay on some of it, but there's been a lot of development in the conversation around pensions. And so this can be part one of pensions and annuities. Do you love them or hate them? And for some people, they love them, and for some people, they just don't. And we're going to go through both of those arenas and discuss that. I think this is a really relevant conversation because there has just been so much stuff since 2014 in that Multi-Employer Pension Reform Act that was initiated, and all the stuff that's gone on. And this was part of the election conversation. And a lot of people, this is a what does my future look like in my pension, or, you know, Social Security or an annuity, and all those different pieces, because people need income in retirement. I think it's going to be a big conversation and worth the listen for a lot of people.
One of the challenges in retirement is having security and a really good understanding of what the rest of your life after work looks like, or after you transition from being the full-time 40 an hour gig, whatever that might be, or even if you're consulting and transitioning out of being full-time in that and looking for other ways to transition your life down the road, there's just an inevitability that age happens, right? And we're not going to be able to turn on or turn off an income stream for ourselves. And so the pension idea has a huge resonance for anybody that is looking towards this retirement corridor and having security and a sense of, we understand how life is going to look for us and our income is going to be there for us. So that is one of the underlying tones that we have to understand first and foremost around this idea of pensions. And we're going to get to that and what makes sense around that. But before we get too much into the show, we should probably go ahead and take a moment here to go into Money in the News. First off, Ben, did you know that McDonald's is in the news again? Making big waves out there with some plant-based burger options and a partnership announcement for them.
Seth, I saw this article, and as much as eating McDonald's today doesn't sound like the healthiest option, eating plant-based, I don't know. I'm not there yet. I haven't been a Beyond Meat fan myself, but it's okay. I mean, it's okay.
Have you tried it?
I have. I did try it one time.
Okay.
Yeah, I did try it.
It's funny. I ate McDonald's yesterday, and it's not something that's probably going to be on my menu today. It's on Warren Buffett's menu every day.
Wow, you admitted that. I love the Jim Gaffigan comedy skit where he's like, no one eats McDonald's? Like, it's just like it's some sort of sin or something like that. And he's like,
I'm afraid to tell you, yes, I do.
And so he's like, he says, whatever, 32 billion burgers sold, someone's lying. I love that line.
Yeah. Oh yeah. Yeah. For us, it was the breakfast on the road. We were trying to get out the door, and and we just couldn't get our act together in time. So that was what we did.
But this is pretty interesting. I mean, Beyond Meat has been a stock that has been rolling all over the place on the market, and now McDonald's is partnering with them in the McPlant patty. This is a 3-year global deal, which is huge. I mean, that is a big, big deal for Beyond Meat, and I'm curious. I mean, McDonald's just launched their chicken sandwich, and that's to compete with Chick-fil-A. And
we should probably mention that Yum Brands, which owns Taco Bell, Pizza Hut, KFC, has quite a bit in the works there, because they've got sausage on their pizzas, and I mean you could have the Beyond Meat tacos, and anyways, it's Beyond Meat. We talked about them in the news a couple of years ago, I'm sure, kind of wondering, gosh, is this even a safe alternative for us? People say it's delicious, but there's a little controversy out there of like, is it actually safer?
Well, I know. I bet, my wife and I were talking about some of the, Bill Gates is talking about making, fake meat and some of this stuff, and like, I don't know, printed meat. I don't know. It sounds so gross and so unhealthy. I don't know. I'm just,
printed meat.
Yeah, like print it with one of these plastic printers, like you can print.
Yeah. Oh yeah, it's 3D, the 3D printed meat.
It's something out of Star Trek. I mean, I think about them. They push the button, and all of a sudden the meat appears. I mean, it's kind of bizarre, but yeah, it takes away the sin of McDonald's and just makes it disgusting. But I will say that a Big Mac sounds good, or a Quarter Pounder any day. Prior to my heart attack. Oh man! Next up here, folks, we have an article here with it's Wall Street Journal. It's by William Boston, of all people, and new chauffeur hailing service seeks to challenge Uber, Lyft in city rides. Now, this is very interesting. There has been a lot of craze around auto travel with the coronavirus, and people's trying to stay out of airplanes and trying to get back and forth. And as businesses are coming back into play, and travel between Boston and New York City. Yeah. It's a very chauffeur-like. The gentleman will get out of their car, and it's called Black Lane, and it's supposed to be an upscale service that basically uses, limo-like vehicles. Person will get up, they'll get out of their car, they'll open the passenger door or the backseat door, and this is definitely something that helps with the business travel side. I like this. This sounds very interesting.
Take a look back a year ago. Pandemic hits. Uber was under distress, right? Because now nobody's going to do anything like an Uber. Like, I'm never going to get in a car with a stranger because the pandemic's here. And then, life starts moving forward, and people are looking at their transportation options. And do I get on the train, or am I doing some kind of a ride share, or do I take a nicer route for myself to get from work to wherever that might be? One of the price point things here that I thought was really interesting here was that they are looking at a price point of around $399 if you're traveling from New York to Boston. And that's about half of an Uber or Lyft ride for that same route. So a lot of value built into what it is that they're creating. I
do like this. I do like the Boston to New York option. It's definitely appealing. I mean, it's not, a $400 trip from New York to Boston, that's not cheap, but for the ease, the computer, the phone, all the stuff that you can still do for a business person, I can see this being a legitimate cost. The previous $700 or $800 trip would just be, it's just out of range. I mean, that's each way. So,
well, the next time I fly into Logan, Ben, this is exactly how I expect you to get me from Logan Airport to the office, okay? Just so you know.
Yeah, that would be interesting. That'll be interesting. Just wait on the side of the curb. They'll be there for you, I promise. If they don't, then there's a bus.
You're going to actually go back and find which Uber experience or Lyft experience that was that you didn't care for, and that's who you're going to call for me?
Yes. Everyone has one of those Uber stories. If you've ridden Uber, you have one of those stories. You're like, I don't ever want to be in this car again. I remember my kids were with us. We were in Florida with Disney, and they could not. I mean, my daughter was like literally wanting to throw up. It smelled so bad in that car. With that, let's go to something else that smells bad. The Fed. Investors worry the Fed's fast driving means it'll have to hit the brakes. Folks, James McIntosh wrote this article back in February 28th, 2021 here. And there's a lot of really interesting conversation around what's going on with the Fed. And we're going to get into this a few shows from now. We're going to talk a little bit about inflation and dig into that. But, there are two things here that he talks about. A strong economy is generally good for stocks. A stronger economy means higher treasury yields. Now, with the Fed trying to control rates and the manipulation of this and trying to have that kind of average 2%, Seth and I were talking about another article that we were thinking about bringing into this story. They're trying to have this average 2% inflation. And there's so much inflationary conversation about history and what it used to be and 2%. But the thing is that inflation has been in the low ones. And, having that 2% inflation piece, is actually higher than what we're currently experiencing. So for them to kind of get a 2% average, and we've been in the low ones, to see 3.5% inflation is something that I think we should be expecting to endure.
Yeah, that seems to be what the goal here is of the Fed, and the market doesn't necessarily like it. It was because it was a really interesting relationship where typically when the market is picking up and the economy is picking up and stocks are rising and then the yields are rising, they're going to kind of stair step and follow each other up, and the market believes there's been enough of that for them to not start to raise rates at this time doesn't make sense. But the fact is that inflation number that there's behind on just seems to be the challenge for them. They have a hard time pushing the economy up, even though they lower rates and do everything that they can to try to help that situation. When the economy has had a recovery like it has, and the market has been on a rip like it has, and yields have been rising, but they don't start raising rates, it's just one of those things that says, whoa. We're going to have some trouble here in the future. And that's kind of what the market was saying this last week, where they just didn't like it.
Yeah, and I think that when we start looking at some of the conversation around the rates, it's interesting because as rates go down, they say that the tech world continues to bubble up. There's more loans, there's more money. It's cheaper money for them to expand and grow in the tech side, which has been something that we have experienced and seen over this last year because we needed more tech, so lower rates were helpful in the development of a lot of the technologies that we've utilized to maneuver and manipulate the business experiences that we have struggled working through over the last 12 months. But on the same token, as rates rise, tech is adversely affected. They go into another section here that discusses inflation expectations being embedded in the Treasury market for the next 5 years. There's a lot of conversation that advisors like ourselves are talking about, like what is going to happen over the next 5 years in inflation, and how does that worry play into it? And then other people are like, well, who cares about 5 years from now? But those are interesting conversations because you need to know when to go to value or, various value assets that intrinsically will rise when rates go up. When tech is basically hurt, push back, push down, you have to understand, hey, listen, there's other areas that can push up when higher inflation happens versus lower inflation. This is a very interesting article, worth the read. Talks a lot about both short-term and long-term rates and how that impacts and infects our marketplace.
So I would say this, and on one of the things too, when the market seems to be pretty savvy about understanding what is going on, and one of the things I think the market believes here is that the measure of inflation, or their understanding of the relationship of what really is happening with inflation is not clear for them. It's not understood, and we'll get into that when we go into the inflation story, because there's a lot of components to that I believe the market has understood and said, you guys, you're not even using a correct measure of inflation to really grab hold of the big picture here.
Yeah, the article ends right here. It goes there. I'm just going to read it. It says there are two new dangers. First, bond yields might rise even further without any further strength in the economy to compensate. Second, the market leadership might have switched from cyclicals to speculative stocks, an unlikely mix of electric vehicles, clean energy, cannabis, Bitcoin, that finds its nexus in Tesla. That's just very interesting. If speculative excess ends badly, the fall might drag down much of the rest of the market. End quote. That is something worth some major consideration. Where is the market going? Are your cyclicals or are your speculatives going to rise? That is a big, big question.
So true. Well, folks, you heard it here first. Or maybe second, I don't know. But anyways, you did hear it here. You're listening to the Money on Tap. We have a great show, a great couple of shows ahead of you talking about pensions, right? And it's a big part of retirement for so many people, not only here in the States, but across the world. And we're going to get into some really interesting facts and dig into some history and understanding, where does this idea come from? How has it transitioned to today? And really, hopefully, we were able to help you wrap your head around what today looks like in this pension idea. And we're going to eventually get into, some pension creation, some personal pension creation, because having stability in your retirement is so critical. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We're going to take a quick break. We'll be right back.
If you're listening today and, your questions are outside the box of estate planning or financial planning or any number of the pieces that we kind of traditionally talk about, don't forget that Brayshaw Financial offers auto, home, and business insurance. And we have an entire department that handles all of that for you. Give us a call at 855-226-8551 and be happy to take care of those needs for you. Or email us at info@yourmoneyontap.com.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Today, folks, we get an opportunity to talk to you about creating something. I think that's where we're going to try to get. But before we get there, we have to kind of back up a couple of places and build into that. But the something that we want to create is an understanding of how to have stability for your retirement dollars. And this idea of having stability primarily comes to us early on. Before any of us were born, in the form of a pension. So that's where we're going to start. And we're going to talk about pensions. We're going to talk about the current state of pensions. We're going to talk about, where do they come from? And, what are the challenges right now? Because not everything in this world of pensions is gravy. And I think that's one of the biggest challenges that people right now in retirement, and so many people that have been pouring into whatever their job is, are facing right now. So it's a huge challenge for us, and it's one that we love to try to uncover and walk through with you. And hopefully, we're going to build an understanding together that will help you to create stability for yourself, and really be the person that is in control of your retirement outcome here. That's our hope for you, the best that we can do. We're going to start off though with letting you know that you can reach us at 855-226-8551 or info@yourmoneyontap.com. That's what you're listening to. And to start us off, what is this pension thing? First of all, where does this come to us from? And it really, first of all, nobody knows. We'll say that. But today, our understanding of a pension and what it is it's a retirement account. that an employer maintains to give you a fixed payout when you retire. And it's a kind of a defined benefit plan. And your payout typically depends on how long you've worked for your employer and on your salary and when you retire. So you can choose most of the time you can choose between a lump sum payout and just get it all right now, or a monthly payout, and that's called an annuity payment. And so, but where this comes from, already said that nobody really knows, but as far as we have any information around this, is that it's been around for a long time, going back to the Romans, government leaders from Caesar, and early kings to modern kings, and parliaments have developed a pension system. And the original intention for this was to provide incentives for their soldiers, because you're going to come and you're going to fight for us, and a lot of that relationship was based off of money. These people were coming from wherever they were living, raising cattle or whatever, grain or farmer and foragers, to really trying to have an opportunity to improve their lives. Plus, they're going to put their lives on the line and go into battle.
It's interesting to me, Seth, as we were reading through all this stuff, and that this was a big, huge piece to almost every military scenario going back to Caesar. They use this as like, go die for your country and we'll take care of your family.
Right.
Which honestly is a big concern for a lot of people. I mean, that's what we all are like, how do we take care of our family? That's why people buy life insurance and they put away for retirement. It's this overall, kind of paternal, like, I need to provide. And that's what we're all kind of innately born with. And, even I think it's really interesting that George Washington used this conversation during the Revolution to, curtail a mutiny of the Continental troops, saying, hey, listen, we're going to have a pension and your family's going to be cared for. That was a big, big deal. This is something that has been part of the military world for a very, very, very long time.
Yeah, so you could even say right now, the country that we live in together, we owe it to the pension, George Washington, and the intervention of that pension and ensuring those pensions to those colonists. Isn't that what you guys were? I don't even know, because we're over here in Oregon, and so we're not really part of the original 13. So we're something kind of different.
I'm going to go with Oregon, just different. How's that? Sorry, all Oregonians, but you guys have been through some serious difficult times this last year, and it leaves a lot of question out here. What's going on over there? So
we just need prayer, folks. We just need your prayer. Thank you. So that's the beginnings, right? And that's and it made a lot of sense. And this idea of pensions is one that today we don't necessarily have, embedded in military service, even though, there is that. It's a part of what the military service can offer. But that idea was taken over into the public sector. And what happened there was pretty much the same thing. Oh, hey, you're going to come and not fight battles for us, but you're going to come and you're going to work for us. How do we help give you some kind of security, some kind of trade-off here, so that you and your family, for all of the service that you have poured into this organization and keeping this organization going, can continue to live and survive and not have to worry about, your income for the rest of your life. It's the rest of your life piece that I think is in your rest of your life and your family's life that has been so key. And it's one of the things that the Social Security idea is our public pension system that we have here, that we talk about and we work with often. We've got Ken Barron, who's with us on staff at Brayshaw Financial Group, that worked for 30 some years for the Social Security department and helping those folks out over there before retiring and coming over here with us. So it's a huge conversation that we have here, and trying to make sure that people are understanding what that is and structuring that the best way possible for them and their family. So that's the idea and the understanding around where does that come from? What does it mean? What does it transition to? And where is it at currently in the public arena? And right now in the public area, there is a huge challenge out there. And the biggest challenge of all for many, many of these pensions is that they do not have enough money to cover the obligations and the promise to the participants in those pensions.
Seth, you were right on there. I mean, one of the things here, folks, and I don't want to scare anybody. I think that's not really our point regarding pensions, but there is a lot of turmoil around pensions. It's been part of the election process. It's been around. We mentioned earlier, the Pension Reform Act of 2000, the Multi-Employer Pension Reform Act of 2014. Those are types of things that we have talked about on the show, and pensions are in question. There's lots of fear. I mean, the concept of the pension is the thinking that you're going to have a guarantee of pay to you in the future. It's a promise to pay. What's interesting about the promise to pay and the pension thinking is that that's what annuities are. Annuities are a promise to pay. And I think that's where we're going to talk about kind of the similarities and the differences as we go through these shows, the pros, the cons. Because one thing that people need is they need a simple retirement. They don't want to worry about when they're 85 years old, how they're going to manage their money and create income. They want a certain amount of automatic care for their retirement funds. And I think that's where we're going to talk about pros and cons. And should you be concerned about your pension? Are there things that are going to happen? I think the thing that's putting so much pressure on the pension world is just the number of retirees. We talk about this all the time, that there's 320 million Americans with, 35, 40 million Americans retired. And then in the next 20 years, there's another 80 million Americans going to retire. That's 120 million of 320 million Americans retired. That's basically a third plus of the country retired. We've never had that before. Now, all those people are going to be looking for their pensions. They're all looking for their Social Security. They're all looking for that. That's why when you get your Social Security packet, it says in the right-hand side on the second paragraph down, it says, we're going to run out of funds in 2034 or whatever the year is. And it's because of the demand and pressure.
Yeah, so it's not just limited to the private sector pension as far as the scarcity of funds in those pensions. It's right there at the Social Security in that federal level as well. And so that's an interesting conversation. And I don't know, probably a whole other show I think that we've had a couple of times on that. But yes, it is exactly what you were saying. It's that this is not intended to necessarily be a scare tactic. It's just really is hopefully a conversation that people are willing to have and understand.
Yeah, and then you get into, okay, well, my pension's guaranteed, hey, listen, they are guaranteed. It's by the Pension Benefit Guaranty Corp, the PBGC, and that's a nonprofit corporation, and it guarantees the continuation of your payments for private sector defined benefit plans, and it's something that's worth having some legitimacy. It's an independent federal agency. It's overseen by the Department of Labor. This is a legitimate backing piece to it. And so they, under that 2014 Multi-Employer Pension Reform Act, a multi-employer has to apply to the federal government to make a change to your pension to get the permission to do that. The thing is that there's so many of these pensions that are so underfunded, poorly managed, missing the mark. That if all of them start crashing, the PBGC does not have enough money, and there's just not enough backing to do that. We'd have to print money and money and money and money just to make up for the promises to do it, which is why the federal government is allowing pensions to be changed. And I think the scary part of this is that a lot of people don't realize that it's not like, hey, I'm not retired yet and my projected pension is XYZ and now it's going to be 10% less. It's not, it would be wonderful if it was that insignificant. Matter of fact, it'd be wonderful if the application was only 20 or 30% reduction request. But these things are 40, 50, and 60% reduction requests. And we're seeing things approved in the 40% range pretty regularly now as the applications are going through.
Yeah, you talked about the application process, and there's if you were to go out and just Google pension cuts, there's quite a few resources out there for you to take a look at, and I won't talk about all of them or necessarily try to cite all of them here, but it was as of 2019 there had been 12 pensions that had applied that had been granted approval for those pension cuts. And taking a look at 2020, there was at least 2 more that those applications had been approved. And I'm trying to, I think this is like Composition Roofers 42 pension plan. There's the local union 237 pension plan. So there's resources out there to take a look and see how many people have applied. And if you take a look at all of the applications and it's not necessarily that you want to try to understand the rate of approval or anything like that. It's just that there are a lot of the pensions out there that are making application. And even when they're getting denied or they're withdrawing them, they're usually going back through that process to either amend that whatever it was that was not approved or kind of massage that application to get it through, because just the fact is that they do not have enough money to meet those obligations.
Yeah, I think this is really very scary. I mean, there's people here. I'm looking at this article, in unprecedented move, pension plan cuts benefits promised to retirees. This is back in January of 2017 by Janelle Marte. And it talks about a gentleman here. He says, Joe Finley, he's 63 at the time. He said he regularly worked 12 hours a day and took weekend shifts so that he could earn more credits for his pension. He talks about the sacrifice of time with his family and his children. I mean, it is the quintessential example of the American worker. I mean, and his monthly benefit was $3,500 and was reduced to $1,900 that he was previously receiving. I mean, this is a very scary thing. The reduction was actually the equivalent amount of what his mortgage was on his 3-bedroom home, and now they're discussing the sale of that. This is 2017. Now, I don't know anything about Joe Finley today, but I will tell you that he is not alone because he got the cut. Other people got the cut too. What's also interesting is that they talk about some people will be slashed up to 60% of their pension benefits. With 20, it says benefits will be cut 20% on average, but some retirees are expecting monthly payments to be slashed by as much as 60%. That's financially devastating and something that we don't know how to manage, because honestly, this is just a multi-employer pension reform act, right? They haven't even discussed the individual pension reform act. And what should you be doing with your either current pension, the pension buyout they might be offering you? Any of those questions are regular conversations we have with people who walk through our doors all the time. Like, hey, I don't even know how well backed my pension is. If you think about how hard it is for companies to stay in business, and then also how hard it is for them to keep a pension going, and how volatile the stock market is and the investments and what they're doing, it almost seems ridiculous that companies even offer pensions, because they just don't have the wherewithal to run their business and run your future. And that's what they're saying. And there's a lot of push because, hey, we're just on the multi-employer pension reform act right now. There's going to be an individual employer pension reform act because the demand and the pressure on these organizations to pay out those funds. And the thing is, it's not like they're paying it out over a huge long period of time, which well, they are on some level, right? They're paying those things, but it's the instant demand of all these baby boomers. just instantly saying, hey, I need my pension. Hey, I need my pension. Hey, I need my pension. You got all these people raising their hand for their pension every day. 20,000 people a day or whatever are retiring. It's a monstrous number. And they're all looking for their payouts. They've been waiting for this day. And I think the management of those numbers is going to be excessively complicated. And then if you look at the stock market, we'd have people talking about bubbles. We have people talking about crashes. We're some people that have concerns about long-term longevity and quality of the market and being positioned properly and looking at where growth is going to be. You don't think pension companies are? I mean, they're investing in the same market we are. And those are real concerns. And trying to make sure that the one piece that you think is the foundational element in your portfolio is, which is sacred to you and secure, it just might not be. And this is a big, big concern because we like pensions. I mean, we love the story of income because that's what it's all about in retirement. It's all about how much income you need based on how many expenses you have and the offset of those. And that's really where I think this all comes together. And you say, hey, I'm okay. I've got this retirement income here. I got the retirement income here. I got this pension. I mean, we meet people all the time, Seth, right? I mean, with pensions galore, it's $100 from this company. It's $500 for this one. And then I worked at this one company for 20 years. And that's supposed to be $2,500 a month. And you're like, I don't know. I don't know if I can say in my financial plan that I can guarantee that pension out for 20 years because I'm not guaranteeing it. But that's what the financial plan's saying. So how much faith do you have in your long-term pension is a big, big question.
Folks, you are listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And if you have a pension, you probably have a question. Whether or not you even have a question about how solvent that plan is. So often when people are calling us up and we're taking a look at, doing some work in financial planning and trying to put the pieces together, it is a complicated piece of understanding that you need to try to have before trying to build out other places within your financial plan. So that's what we do at Brayshaw Financial Group. That's Ben and I here. And you can reach us again at 855-226-8551 or info@yourmoneyontap.com. We'd love to help you out. We're going to take a quick break and we'll be right back. Hey folks, Seth Krussman, Brayshaw Financial Group is our company, and we bring to you Money on Tap. I say we, that's Ben and I. We have a lot of fun doing this show. And one of the things that we love about doing Money on Tap is that our goal for you to have access to the financial planning world. How do we think? What are we doing? What are we talking about? Raising the bar of your financial education. It's so critical. And that's what we're doing here. The other side of this is as well, we're financial planners. If you are looking to work with a financial planner, if you want to have that playbook for you to understand the important things right now and how you're going to get to your goals or how you're going to retire successfully, that's what we're doing as well. If you have $250,000 of investable assets, give us a call. It's free to you, and it is worth your time to pick up that phone and give us a call and discover what complete wealth management looks like. Ben and I are excited about the opportunity to partner with you and give you that financial plan that's going to make the next step so much better understood and get you where you need to go.
Now back to Money on Tap with Ben and Seth.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And my name's Seth Krussman, and I'm joined here, as always, with Benjamin Brayshaw. We're both financial planners at Brayshaw Financial Group. I don't know where we got the name for the company, but I love it. And we're talking about pension plans and annuities, love them or hate them. And we've been talking a lot about the challenges throughout the pension industry. And one of the bigger names out there that hit headlines very recently was GE. And as they froze their pension, that was just a huge huge headline. And probably we talked about pensions on a couple of shows, or at least in Money in the News at one point in time there about that. But it froze its pension benefits for more than 20,000 employees. And the goal there was a solution for them to set aside $5 billion to cover funding requirements through 2022. And these was a step to help trim a shortfall by as much as $8 billion, is what that company said. Now, go on to understand that a little bit. What does all that mean? The people that had already begun receiving pensions were continuing to receive pensions. They started offering a lump sum buyout for anybody that hadn't started receiving pension of $100,000. But there's a lot is like 20,000 people that had a very different understanding of what the future was going to look like.
Yeah, no, that's for sure. The thing about pensions is they're a wonderful hope, and there are very few pensions that are kind of overfunded and running and unsuccessful. There's just not that many of them. And the thing is when there's a deficit in a pension, corporations usually come up with that deficit. So if they say, hey, we think it's going to do 5% or 7% a year, and it only does 2%, they're usually either redoing the actuarial tables, trying to figure out how much they have to come up with, or they need to come up with that difference to keep it on track, on pace. And that is a huge vulnerability.
I just love our governor over here at the state of Oregon is, and if you're here in Oregon listening to us, is Kate Brown. And it was a couple of years ago that the Oregonian paper talked about the public pension here is PERS, and they were talking about the underfunding and the underperformance of the pension, and it was averaging something like 5%. Or something like that. I don't know remember what the number was, 4%. And Governor Brown said, well, all we have to do is, earn a better return on the money. Well, you're right. That's all you have to do. Go do it. And so many people try to figure out, how do we do that? Do we change the company that we're using to invest those assets? Whoever's investing those assets is trying to change the investments to get to those, the net number that plan needs. But it ain't easy, folks, right?
It's unbelievable. I mean, it's like, hey, listen, we're not going to come up with more money to fund this thing properly. We're just going to come up with somebody who can invest it better, which means that we're going to then change our tables and say, hey, we'll use a higher percentage rate so we still don't have to put the right amount of money in. The truth is, folks, is that these plans have gone underfunded for the most part for way too long, and that is a big, big problem. What I've found is that, looking at these plans and kind of where the market's going and what people are doing is, for a lot of people, they're just planning on potentially some sort of reduction in the payout. But some of the problems that have happened is a lot of people do pension maximization payouts. So what they'll do is they'll select like the maximum payout for a single life, and they'll use the difference between that and maybe a joint life payout. So let's say your maximum single life payout's $1,000 a month, but your joint 100% payout with your spouse is $750. I don't know. So it's $250 a month difference. People have taken a portion of that $250 difference or savings or the additional monies they're making and bought life insurance to, kind of reinsure the value of the pension and the asset to the spouse, which is, and sometimes that is a net benefit. Meaning that they actually get to keep more than the $750. Maybe they keep $800 and spend $200 on insurance. So they actually take more than taking the joint. The problem is one of the big, huge unknowns, if you're out there listening to this, is that if you did that and your pension gets cut, can you still afford the insurance? Like if you take a 40 or 50% cut, you could have chosen something. There's some real risk inside that I don't think has ever been properly disclosed inside that world, considering what has happened. You couldn't even predict most of this stuff. We're just on the front lines of predicting. Most of the people would say, wow, for years you guys have been talking about this stuff. We've been talking about pension. I've been talking about pension insecurity for over almost 2 decades now. And it's just in 2014, they actually created a law that allowed, pension companies to actually address that. Because everyone before that used to tell me, no, my pension's guaranteed. There's no way they could change it. This is what they're promised. And, but now there are ways, and more ways are going to come, because you got 120 million Americans who are going to be looking for their pension, their Social Security, and so forth. Those are enormous, enormous concerns that are just getting bigger and bigger. And the writing's on the wall that we're going to have more and more things to do. I mean, Seth, you mentioned GE. I mean, I love the phrase that GE is as American as apple pie. I mean, Thomas Edison founded it. The company is at the core of our history. And I mean, boom, it's halted. That's a big deal. I mean, there's a constant push on this piece. So what are people doing? I mean, that's kind of the big conversation here. I mean, we talk to people all the time, and we really kind of assess the financial astuteness of where people are at about pensions. We try to educate them around pensions. If they want to rely on their pension, we usually tell them from a planning standpoint, don't use at least 20% or 40% of the income number as something you count on. Consider that gravy. Consider that the excess. And that whatever you need, use some variable of that pension inside there. Now, I don't necessarily feel the same way about government pensions, meaning like military. I think it would be hard-pressed for them to really bash the military pension. So I would probably use a lower percentage in that, but I would still use one. And Social Security, we use the same thing. I mean, for some people walk through the door, they tell us, what, Seth? Well, Social Security is not going to be there for me. People intrinsically know there's some major problems here. And if you're listening and you're saying, yeah, that's kind of how I feel, or if you're in that middle age group, you're kind of like, well, I think something's going to remain. I'm going to get this thing turned on as soon as possible. Now, a lot of the pension changes, though, Seth, I've noticed in all the documentation I've read, and you probably have too, is that it's kind of that over 80 years old seems to be the threshold that they don't institute the same cuts or no cuts at all. Like it's that person who's so far beyond. I mean, there must be some perspective that, we're not going to touch the people who are in their 80s because they've only got a few years left. Let's not stress them out. I don't know if it's a health decision. I have no idea what it is that's driving that, but it's interesting. But I'm looking at things like United and pension change after pension change. I mean, on the list, Seth, there's some that are denied, but not many of them, and so there's a lot going on in this pension world. So I'll tell you, one of the things that we have done a lot for people, and it's more of saying who does investments versus who doesn't. And the investment world who handles investments or handles managing assets, or insurance companies who handle annuities and so forth, because people say, oh, I don't like annuities. I mean, we hear that stuff all the time. Annuities just mean guarantee to pay. I mean, they're guaranteeing some sort of payment, whether it's on death, whether it's on life, whether it's income. I mean, there's all sorts of variable types of annuities, from fixed to fixed index to variable annuities. Whether you want market or no market, I mean, that's kind of the extent of those. But in reality, we've talked with a lot of people who say, I just want income and I need as much certainty as I can bring to the table. Well, annuities have been a real logical choice for a lot of people who are concerned about the pension marketplace, who are being offered buyouts and said, hey, I want as much guaranteed income as I possibly can. And in a number of times, we've used annuities to solve that problem. I mean, for the most part, we manage money, we manage assets, we do investments. I mean, we do insurance. We do all those scopes. That's why we call it three-dimensional investing. Brokerage, fee-based planning, and insurance. Those pieces kind of come together naturally, and the balance of different types of assets can empower your financial planning more than it can take away from it. I think we believe here, well, I know we believe this, but I mean, whether you believe it with us as well, is that it is the cornerstone of everything that we do, is to say that no one answer solves everything. So insurance is never going to be your entire solution. Managed money is never going to be you're not going to just go out and buy stocks, bonds, and mutual funds and just be fine. We do not believe that. We believe that all of these coming together empower you the most. And for the person who's looking for that securitized base pension income, with the uncertainty of all that's going on in the pension world, Whether the PBGC, the Pension Benefit Guaranty Corp, can actually back all of this is a whole nother thing. I mean, if every bank and every dollar went kaput across the board, there's not enough money in the FDIC. The U.S. government would have to step in, right? I mean, so financial collapse, those are big deals. Insurance companies offer contracts. Banks go out of business, insurance companies get gobbled up by bigger insurance companies. I think personally my money's better in that scenario, not in the hands of a pension company, but in an annuity company, just statistically. That's my belief. Now, whether they both go under, the argument could be rattled 15 different ways.
Yes. So what's the solution here? We've talked about what some of the solutions are behind the veil of a pension. And that's great to try to just, understand what are they doing to try to mitigate this, because nobody's just saying, well, we're just going to fall off a cliff and that's going to be that. So people are trying and doing their best to understand that. From our perspective, though, our most simple solution is to start working with somebody. Okay, if it's Ben and if it's us here at Money on Tap, wonderful. We love that. You can call us at 855-226-8551 or reach out to us at info@yourmoneyontap.com. And you can sit down with Ben and I, and we'll talk about with you the intricacies of your pension and how that applies to you and your plan. Okay, and that's the at the end of the day, a plan is something that you need and want to have to understand, some of the things that we've been talking about here, more specifically to you and how this relates to you. Ben's talking about having kind of a buffer of, maybe 20 or 40% of the whatever your expected payout of your pension might be as kind of a buffer. Well, how does that affect the underlying finances and the rest of your assets, whatever those might look like? Okay. Ben's talking about three-dimensional investing, getting this 30,000 foot view so that, you can see with clarity all of these pieces coming together to work for you. We believe in the power of planning around your investments. Okay. It's great for us and fun for us to talk about all these separate entities and how do they work. But at the end of the day, we wholeheartedly believe in the planning process, the three-dimensional investing process that we've put together for you to know what that next step could be, should be for you. We want you to have a better understanding, and through better understanding of this process and what it is that you have, that will create clarity for you. The understanding is what creates that piece for you. It's not them telling you guarantee this, guarantee that. It's your understanding of what does this mean? How does this look? How does this work? And having somebody come alongside you and help you with that is so critical. That would really be the step one in any kind of a solution here for you folks, is really getting that understanding. We wholeheartedly believe in our three-dimensional process here because it takes into account all of the pieces. We're not going to just lean on one piece. We're going to bring it all together for you. You've been listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. We've enjoyed the show today. We've been grateful for you for joining us. We thank you for calling us and giving us an opportunity to speak into your life and be trusted advisors with you. That's something we hold really sacred, and we want to appreciate you for that. So thank you so much. And we just also want to appreciate you for allowing us to be who we are and have fun with what we do on a daily basis, which is financial planning. You can also find us at Facebook. We're at /3D Investing. We're also on Twitter at BFG_LLC. And as always, you can also find us at yourmoneyontap.com. Thanks for listening. Thanks for liking our podcast. We appreciate you, and we can't wait to make it a great day and a great life with you here at Money on Tap.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.
Well, bye.